Hi everyone. Hi everyone. Hi. Okay. Dollar index GRUS 100. Please. Hi Ferda. Welcome. Okay, I do see a request. Just give me a sec. I do see more people joining, so let's just give them a bit of time to sign on. Okay. Hi everyone. Welcome to our Monday weekly live analysis session as we go through some of the key fundamental technical analysis that we can find in the charts and what to expect for the week or at least for the day. So we're going to be highlighting key levels today. Yes, hi, welcome. Hi, Brian. Hi, Joash. Okay, so this webinar is brought to you by Everest Fortune Group in collaboration with Vantage Markets. We're an award-winning research firm and finalists for 2019, 2020, and 2021 for Best Forex and Equity Research. We work with major financial institutions to help them forecast where the markets are heading, and now we have a special partnership with Vantage Markets where we're bringing you guys the good stuff every day. Okay, so if you guys have any questions, don't be shy. You guys can ask anytime throughout the week. Okay. Anyways, as usual, guys, you know how this works. Disclaimer. Please remember that this webinar is purely educational and nothing in this webinar should be construed as investment or trading advice. Okay, so please do your own due diligence before you are trading. Just a risk warning, trading on margin as for Forex or safeties carries significant risk and may not be suitable for all investors. So do be careful, especially those who are new to trading. Okay, so let me introduce our team for a bit and then we can head straight to the live charts. I know some of you are really excited. I already see Ferda with her request. I see Jess with some requests as well. So dollar index, GER, Germany 30 and US 100 by Ferda, and I've got XAU USD by George. Okay, so Everest Fortune Group, we're an award-winning research team. Like I was saying earlier on, we do a lot of research. We're a very research-based institution. We give a lot of forecasts where we think the markets are going. We do radio appearances, talk shows, podcasts, and we have a very lean team. So you guys have probably met Desmond before. He would have probably taken you guys for these webinars. For those who have never met me before, because I don't usually take you guys for these webinars, right? My name is Cassandra. I am an investment analyst and a prop trader at Everest Fortune Group. I am a profitable trader. I've been managing more than quite a bit of funds, and I have brought quite a bit of profit myself as well in the last few months. So a little bit about me in terms of trading is that I have passed FPMO and my Forex fund multiple times. So for those who don't know what these are prop trading tests. So these companies, they provide you with a test, and to pass this test, you need to do 10% a month in profit or 8% a month, okay, depending on the company you are doing it for. Okay, so I pass up multiple times and you cannot have a drawdown with below 5% within the day. If not, they will take your account away. Okay, so whatever I share you guys today is basically what the strategy I use and the technique that I use to pass this test, and hopefully it helps you guys to grow your account and improve your trading as well. Okay, so what is my strategy like? Basically, we're going to go through multiple time frames. Okay, what time frame should you use for day trading? I'm going to do day trading because I am a day trader, so we will be focusing on day trading. News events, it's not that relevant. It depends on the time frame you are looking at. Referencing to higher time frame, that is very, very important. Graphical key levels such as support, resistance, trend, identifying momentum, again, trend, and taking the trade, and combining all of this with Fibonacci and indicators. This is very important so that we can increase the probability of the trades working out for us. Okay, so if you guys do have any questions, do ask me throughout the webinar. Don't have to be shy. Okay, let's go straight to the live charts. Give me a moment. I'm not sure what happened to my trading view screen. I had a trading view screen there a while ago. Okay, then don't worry. Just give me 1 minute, guys. I had a trading view screen, it disappeared. I'm just gonna re-log into trading view. What's going on? Page is unresponsive. Okay, what's going on? Give me 1 minute, guys. Having some technical difficulties of all times to have it. Okay, I've got trading view on. I have no idea what is going on. Okay, so if you guys don't, I mean, this is a good wave, especially for the beginners. So what I use is TradingView. I love it because first of all, it's free if you don't, especially if you're new to trading. Their charts are quite, I mean, they have quite a range of charts from different brokers. So that's a good thing, you know, you can choose which chart is closely related to your broker's charts. Therefore, your technical analysis will be more accurate. Okay, can I just double confirm that everyone can hear me? Everyone can hear and see my screen clearly, right? Okay, thank you. Thank you, Muhammad. Thank you for that. Thank you, Joe Ash. Okay, I'm assuming everyone can see my trading view screen. So let's start with Ferda's request because she did request way before Joash and the others did. So dollar index, let's do DXY. Just a rough, whatever I remember, DXY should be still bullish, right? DXY. I'm not sure what's happening. Okay, sorry guys. I think it's like a huge storm outside right now. I don't know if you guys can hear the thunderstorm. There's literally thunder that's going off every second. Okay, I don't know if that is what is affecting the internet. Usually it's way smoother than this. Okay, sorry about that. It doesn't matter. Okay, let's do DXY. So whenever I am charting, I will always clear the charts. Why? Because I don't want any prejudice, right? I don't want any prejudice. So I don't want anything that I have drawn previously to affect what my decision will be today. Okay, so I'm just gonna remove everything on the chart. Let's clear all of that. Okay, guys, just give me 1 minute. So sorry, let me try to log in again. It's really too laggy. Okay, I'm gonna get rid. Sorry guys, technical difficulties. I'm gonna not use Safari and I'm gonna use TradingView now. Okay, sorry, I'm gonna use Safari. I was using Google Chrome. Okay, so hopefully it's a bit smoother. Okay, it is a bit smoother. Okay, sorry about that. I don't know if it was Google Chrome or is it the storm outside that's causing this disturbance. Usually I do so many webinars and they're usually very smooth. Okay, so DXY. Again, I was saying, usually we start with an empty chart. Okay, why? Because we don't want to be swayed at where we think price would be going. So what I usually do is I start from the bigger time frame. So let's start with usually I start with the daily, but right now it so happens to be on the monthly by default. So we can highlight some things that we see on the monthly. It doesn't matter, right? It might be relevant later. So I'm just going to highlight that resistance there and that support. Why is it important to highlight support resistance? Is because price tends to reverse off support and resistance, or it tends to react of support and resistance. So every time it comes to support, every time it comes to resistance, there tends to be some kind of reaction there. Okay, so again, Muhammad, we will be doing dollar index, German 30 and US 100, and then we can do gold. Okay, so we should have enough time for 4 charts today. Okay, so that's the monthly. Let's see, weekly, same resistance here. Sorry, same support here. So we're just going to use this as a support. Let's go down to the daily. Okay, so daily, if you can look at where we highlighted the support resistance, the support resistance will not be relevant to us. Why? Because it is too far from where current price is. Okay, so we're going to get rid of that. That's why I don't usually look at such a big time frame, because it's not relevant to us day traders, right? Okay, so what I want to do when I go to a chart is first look for trend. Why am I looking for trend? Because the trend will determine whether you're going in for a buy or you're going in for a sell. So obviously right now I see an uptrend. I don't know if you guys see something else. I only see an uptrend, right? So an uptrend is very simple. It's doing higher highs and higher lows. Okay, it's doing higher highs and higher lows. So we can now narrow down where we think that uptrend is going by using maybe a channel, a triangle, some kind of technical analysis tool to help us narrow down where we think price is moving within. Okay, so based on this, I do see a slight channel happening here, right? That means when we spot a channel, it means that our bias is that price is moving within this channel. Okay, so valid channels, you need 2 touches on top and 2 at the bottom. Okay, you need 2 touches on top and 2 at the bottom. Okay, in this case, I'm gonna try my best to plot this channel, but it's not necessary that it will align nicely. Okay, let me try my best. Okay, that's as good as I can get it to go. Okay, let me just move this a little bit more. Okay, so this channel, although I do see price kind of moving in this structure, the channel doesn't work it's not very nicely aligned. Okay, why? Because the channel would need price to touch it. Okay, in this case here, we can see that price didn't even touch the support of the channel, but the resistance of the channel is fine. So price touched here once, it touched here twice. The 3rd time it barely touched it, but I guess we can count that. Here it barely touched the support. The 2nd time it touched the support, but the 1st time it barely touched. So this is not the best example of how a perfect channel would be, but I think it's good enough for us to use, okay? Because remember, we're just using this as a reference. That means whenever price comes anywhere close to this area, we expect it to reverse. Whenever it comes anywhere close to this resistance, we expect it to reverse as well, okay? So this is our bias. Currently, right now, our bias is buy, or that DXY is going an uptrend. Why? Because there's nothing on the chart that is telling us otherwise. Unless suddenly we see price breaking this channel here, suddenly we see a super strong red candle, then yes, that will kind of give us bias that price is going down. But at this current point of time, I'm still a bit biased to bullish because of the structure of price with the higher highs and the lower lows, okay? So because we are only using the channel as a reference, it doesn't matter. What really matters is actually support and resistance. And I mean horizontal support and resistance. That's super, super important. Why? Because again, I was saying earlier, price tends to react off support and resistance. Okay, so I'm just gonna highlight very obvious support and resistance that I see. I do see a resistance here. That's not gonna be too relevant to us. Why? Because we are day trading, right? We are day trading. We don't even know if price will get there today. Okay, so today what our aim is to identify where exactly is price going to bounce off. Okay, where is it that price will have a reaction? Okay, so I'm just highlighting a few levels that I see. Okay, we've spotted some levels. Okay, now that we spotted some of our support and resistance, we're going to go down to the even smaller time frame. Okay, we're going to go down to even smaller time frame to see if we can find a better support resistance. Okay, so I do see 2 support right now. Okay, the first one is here, where this swing low is, and the first one is here where this swing low is, and the second one is here where this swing low is. So I expect price to have some kind of reaction when it gets to one of this. I'm gonna get rid of the channel because the channel is not really helping us right now. Okay, because for price to get to either one of our support, price would need to break that channel. Again, the channel wasn't very strong to begin with, so we're not going to use it as reference. We just need to remember that our overall bias on the daily is that price is going in an uptrend, okay? Price is going in an uptrend. Okay, cool. So now that we have identified our support and resistance, the next step is to combine the support and resistance with Fibonacci levels. Okay, Fibonacci levels are super important. Why? Okay, I'm gonna use this analogy because I don't really take you guys advantage, so you probably would have never heard me say this before. Okay, so let's pretend you are this person here. Okay, you I don't know why it looks like a candlestick. Okay, you are this person here. So you are walking to the right. Okay, you are just walking to the right. You are walking and you're walking to the right. Okay, so you come across this door, right? You come across this door. Now you want to push that door. If this door is super strong and heavy, you're gonna have a hard time pushing this door, and therefore you're gonna fail opening that door, and you will have no choice but to turn back, right? You have to turn back because you can't seem to get the door open. Okay, so when I look at this analogy, it's the same as price. Okay, so the man here is price action. Okay, the direction it's going is either bullish or bearish. It's either going up or down, you're buying or you're selling, and the door is your support or resistance. Okay, so to know whether this guy here can continue, push the door open and continue into the next room, like here right now, price is going to get to the support, and you don't know if price is going to break the support and continue down, or is it going to fail to break the support and reverse, right? You don't know that. So right now, your job as a technical analyst or a trader or what the analyst that you are, okay, you need to analyze the strength of the door. How heavy is this door? How likely am I to push this door open? Okay, because you now have identified where your door is, you need to know if you are even able to push the door open. Okay, so how do you do that? You combine that with Fibonacci levels and indicators, okay? So I'm going to use Fibonacci levels to see if there's anything that lines up in the support and resistance. The more Fibonacci levels lining up in the same area as that support and resistance, the stronger the support and resistance is. Therefore, it means that price is going to have a hard time breaking that support and resistance and going lower. Okay, if it breaks the support, it's going to have a hard time breaking the support and going lower. Okay, so let's identify if there's any support resistance. Okay, so for Fibonacci retracement, we use all the levels below 100%. In this case, I'm going to use the 78.6 because it lines up. For those who don't really understand Fibonacci, don't know what I'm saying, I would not be able to explain to you today because today's session is live analysis. We need to focus on getting live analysis rather than all this topical stuff, okay? So when price gets to 110.127, there is going to be some kind of resistance there. That means I'm not saying price will never be able to break this area. I'm saying when price gets here, there is a chance price might turn back because of the resistance there. Okay, if you reach the door and you're trying to push the door is so heavy. What do? You just give up and you turn back, right? Okay, that's similar with price. If the bearish momentum is not strong enough, right? If the bearish momentum is not strong enough, price will have a very hard time breaking this support and it will not be able to go lower. And therefore, this will be your entry for the buy. Okay, this will be your entry for a buy. Okay, everyone got it? Okay, let me see if I can find any other Fibonacci levels. Again, like I said, the more Fibonacci levels lining up in the same area, the stronger that area will be. Okay, so we were looking at Fibonacci retracement earlier on. Let's see if the Fibonacci projection lines up anywhere close. Okay. The Fibonacci projection does not line up anywhere close. It's actually very scattered. Okay, we don't want that. We want things to be lining up in the same area. Okay, so there's two possibilities right now that I think, right? So there's gonna be a lot of possibilities. Your job as a trader is to find the one that is most likely going to play out. This is what I think just from one look that price is going to happen. Price is gonna get here, okay? And then it's gonna start, it's gonna do a little bounce here to where we don't know yet, okay? But I based on these levels and technical analysis, I do think there is going to be some kind of reaction there, and that there's where you can get in for a buy. Okay, so if it doesn't happen there, it means that it's going to break, go a bit lower, and maybe here that's where the buy happens. Okay, so in this case, we are going to use this level here as the entry. Give me a sec. I'm going to go to the daily time frame to see if that even makes sense. Right. Okay. So I do think there's going to be some kind of reaction here. Yeah, some kind of reaction in this first level here. If not, the reaction is going to start somewhere in this level here. Okay. So we won't be able to test out the theory. So what we're going to do is narrow down where we think price is going to go and just follow our possible scenario. So I'm going to change this. This is going to be our stop loss. Okay. Sorry, give me a sec. This is going to be our possible entry. Okay, and this is going to be our possible stop loss. Honestly, I don't think the support is very, very strong. Like a very, very strong support will have so many Fibonacci levels lining up in the same area. But in this case, we only have one Fibonacci level lining up here. So I do think it is going to be, there's going to be a reaction, but I don't think it's a very, very strong support. You know, sometimes when you see a very, very strong support resistance, you know for sure that's where the buy or the sell is going to happen. Okay, in this case, I'm just like, okay, there is some kind of resistance there, but is that resistance strong enough to stop price from going lower? We don't know. We have to wait until price gets here. Okay, so I do think this is going to be the buy. This is just one hypothesis we're going to go. Okay, where are we going to buy it to? Usually the take profit, I will put it in the next key level. Okay, the next key level. Why am I putting in the next key level? Because price is attracted to key levels. So when I say key levels, I mean support and resistance. Okay, I mean support and resistance. So there is a chance price might bounce here. The next key level that I see, I don't see any very significant key levels other than this. Okay, but for you to hold your trade until this area here might be a little risky. I'm trying to find you guys a closer take profit area. Okay, this is the closer one that I can find. Okay, so this is your possible take profit area. Okay, there's a possibility price might reach here, but to minimize the risk, you can just take profit here. Okay, so what you're gonna do now is combine your analysis with indicators. Okay, so once you have found your analysis, you are going to combine it with indicators. Why? Because your indicators are just double, triple confirm of whether your analysis is correct or wrong. Okay, so just looking at some of the indicators, I do see the stochastics. Okay. That's not the correct one to use. Let's use a horizontal way. Okay, guys. If price gets to our buy entry, and it so happens that on the stochastics, it is here on this support, that is your signal to enter for the buy. Okay, because then the stochastics will agree with our analysis. But if the price has reached our buy entry, and stochastic is nowhere near here, I would say it is risky to get in. I would say there's a possibility of reversal there, but it is not safe. Okay, it is not safe. RSI isn't telling us much, right? There's no information I can use. RSI, Ichimoku is totally not agreeing with our analysis. But one thing I noticed with Ichimoku is that Ichimoku price has been going sideways. Okay, so Ichimoku indicator does not work on sideways market anyway, so it wouldn't be giving us accurate information at this current point of time anyways. Okay, so at this current point of time, we can rely on stochastics. Okay, we can rely on stochastics. So again, when price reaches our buy entry, and so happen that on the stochastics, it's also here at the support, that is your confirmation to get in. Okay, another confirmation you want to look out for is that when price gets into our buy entry and you see a reversal pattern candlestick, okay, a reversal pattern candlestick, that is your signal to get in. Okay, I'm googling reversal pattern candlesticks. Why? Because I won't be able to go through the candlesticks with you guys today. Today's session again is to focus on live analysis. Okay, so these are some of the reversal pattern candlesticks. If price goes there and you see a reversal pattern candlestick, that is another sign that yes, price is agreeing that this is where the reaction is going to happen and you are okay to get in for a buy. If price gets here and you don't, on the stochastics, you see that price is not at a support yet, you don't see a reversal pattern candlestick, that means this is not the ideal buy entry, and there's a possibility the ideal entry is much lower. Maybe the stop loss is where you should be entering. Okay, we don't know until price actually gets there. Okay, so for those who are like, oh my gosh, you're not really telling me anything, I just need to tell you guys the confirmation is at wait. When you wait. So trading is 10% buying, okay, 10% selling, and 80% of the time you are just waiting for confirmation. Okay, honestly, 80% of the time you are just waiting for price to get to where you want it to go. You're just waiting for some kind of confirmation. But trust me, waiting will save you a lot of losses, and it will also bring you a lot of profit. Okay. So please be patient and wait for price to get here. Look out for the 2 confirmation, and then you can get in for a buy. If you do not see the 2 confirmation, do not get in for the buy. Okay, wait for price to go to the stop loss area, and maybe you can consider getting in for the buy there. Okay, but in general, I am still biased that price is going to be a buy. Okay. So that is my analysis for DXY. Let's move on to German 30. Okay. We're gonna go through Ferda's request, and then we're gonna go through Joel's request of XAU USD. Okay, Ferda, I will be very honest with you. I only trade gold. I'm very familiar with gold, the characteristics of gold. Okay, for German 30, because I don't trade this index pair, okay, so I don't know what the characteristics is. Okay, I'll give an example of characteristics. So gold XAU USD, what I noticed is that price tends to go sideways a lot. Okay, that's one thing. When it's consolidating, when it's doing its pullback, it does a lot of consolidation. Number 2, it does a lot of wicking. Okay, so even though your stop loss can be here, a lot of times it can just wick you out and then continue in the direction that you want. I don't know what DEX does, but just one look, I do see a lot of wicking as well. Okay, that means if a particular pair or index or the instrument you're looking at wicks a lot, it just means that you need to be extra careful of where you place your stop loss. Okay, your stop loss placement is very important because you don't want to get wicked out and then having your analysis being correct in the end. Okay, that's going to be very frustrating. Okay, so let's do daily first. We need to first find trend. finding trend will make your life so much easier because then you can just play the continuation. There are many ways to trade. There's different play styles, there's different strategy, but the one strategy that I think is safe and it's just easy is just playing continuation. That means you identify trend, you get in on the trend, you don't go against the wave, and then you just ride the wave down. Okay, so I do see price going in a downtrend. Okay, one thing I don't like about this is that price looks like, let me see, I'm trying my best to plot this as accurately as I can. Plotting technical analysis is very important. You need to use it as accurately as you possibly can, okay? As you possibly can. There's no perfect way to use technical analysis, but as accurately as you can. That means when you are drawing a trend line, it should be touching your candles, okay? It should be touching your candles. Okay, so one thing I do notice with DAX is that it has broken this kind of like trend line, descending trend line. Okay, it means there's two things right now. Okay, there's two things that could be happening. One, the trend line could be drawn differently, as in this is still a downtrend, but it could have been drawn in a different way. Or two, the downtrend is really over and now price is starting with an uptrend. Okay, so when I see this, it makes me like, I'm really confused on where price is going. I don't know if it's going up or it's going down. I want to believe it's going down. Why? Because price is still making lower lows, lower lows, lower lows, lower lows, lower lows. Even now, it is still making lower low, because if you look closely, this high here has not broken this high here. So technically, if it reverses right now, it is still making lower low. Okay, so right now, direction-wise, we're still it's still a bit unclear. Let's continue to chart this pair so that we can have a rough idea of where we think price is going to go. Okay, so your job as a trader is to get the highest probability of where you think the trade is going. If after our analysis, we find that it's 60% that it's going up, 40% that's going down, that means we are going in for a buy, okay? There's a possibility we'll get it wrong. Yes, of course. There's always risk in trading, but your job is just to collect information and decide what you want to do with that information. Okay, so right now, the information I've collected, that price broke this trend line, but at the same time, it has not broken this high. So it can still be a downtrend. Okay, so information that I've collected so far is still very unclear. Let's collect more information. Support resistance, very important. This is a very important one. I'm gonna take the swing high of this area. Okay, it does look like it has broken. I'm a bit more biased on getting in for a buy right now at this current point of time, because it does look like it broke some of the resistance and there is quite a bit of bullish strength. Okay, let's see what the smaller time frames will be showing us. Okay, honestly, right now I can give you a rough analysis. Okay, but I must tell you, my confidence level of this trade will not be like, I won't be very 100% sure. I personally probably wouldn't get into this trade because it's so much conflicting information, right? But I will still give you an analysis anyways. You guys can decide what you want to do with the analysis. My take is don't do anything with it because, again, information is not agreeing. It's not very confluent. Okay. If price, sorry, this stop loss does not make sense, right? If price breaks this swing high here, where I wrote buy entry, okay, if it breaks, that is the first sign of bullish pressure. Okay, if it breaks, it needs to close above, break and close above. And then after it breaks and closes above, it will come back usually, okay, more often than not, it will come back and retest. It will either retest the first buy area here, or it will retest the second buy area here. Okay, so what I'm saying is this is your possible entry for the buy. Okay, this area that I've highlighted, let me change it to blue, is your possible entry for the buy. Blue. Okay, there you go. It will usually, after a break, price tends to come back and retest that area. And then in this area here, you can consider getting in for a buy. Where do you buy it to? You can buy it to this area. Okay. That is just a very, very rough analysis. I haven't even combined anything yet. I haven't combined Fibonacci. I haven't combined anything yet. Okay, so just be patient. Your stop loss can be slightly below it because I'm not confident with this trade, right? So whenever I'm not confident with a trade and I still insist on getting in for some reason, usually I'll just move on, usually I'll just say next and move on. Okay, in case I'm not confident, I still insist on getting in this trade at a very small lot size, I put my stop loss very tight. Okay, why? Because if I am wrong, I want to be wrong fast. If I am correct, then I'll watch it play out. But if I am wrong, I want to be wrong fast, and I want to minimize my loss as much as I can. Okay, so a very tight stop loss, hoping that DEX don't just wick you out and you can play it to the next swing high. Okay, that's just a very rough analysis. Let me see what happens if I combine it with the indicators. Is my analysis still the same? Yeah, Ichimoku is agreeing with this analysis. Stochastics, not really. Okay, I would say stochastics is agreeing because right now it is just showing what is happening on the price. Remember our condition for entering is that it needs to break. It needs to break. Okay, that's one. Number two, it needs to come back and retest. At the retest, you need to see a reversal pattern candlestick. A reversal pattern candlestick, and that's when you get in for a buy. If you do not meet these three requirements, which is break, retest, reversal pattern candlesticks, do not enter this trade, okay? Because you are setting yourself up for loss. I just need to tell you guys, I've been trading for quite a few years now, and I only became profitable later on, right? When I realized that actually the secret to trading is just to be patient. You don't force trades. You only take trades that make sense. You take high probability trades. There are people out there who take 100 trades a day, but they lose 90 of it because it's just trades that doesn't make sense, right? So if you take one trade, but that trade is a very high probability and you keep hitting your take profit, you're going to make more than the person that takes 100 trades a day. Okay, so it's not how many trades you take a day, it's how many you get correct. Okay, so to get trades correct, unfortunately, you have to be very patient, right? So you need to wait for a break, wait for a retest, wait for the reversal pattern candlestick, and then you enter that trade. Oops, sorry. Okay, and then you enter that trade. So that is my take for DAX, my confidence level for this trade is like not like 100% confident. Maybe your stop take profit can be even a bit lower, because if it's still a downtrend, there's no way it is going to go to where this swing high is, right? Because it wants to respect the downtrend. Okay, I think there's conflicting information on this chart, so I'm not like 100% sure, or I'm not at least 80% sure. So I think it might work out, but will I take this trade? I would probably skip it, because again, I only like to take very high probability trade. If the trade is like, wow, all the stars are aligned, for sure, this is a buy. That's when I get in. If I don't feel that way about the trade, I'm just like, okay, I'll miss it straight. Next. Okay, don't need to force it. Why? Because look guys, there is so many instruments, there's so many pairs, there's so many instruments that for you to chart and look at. If the particular pair or chart or index you're looking at is not giving you anything, don't worry, stop. Just stop, go to another pair, go to the other 100 pairs available and trade that pair instead. There's cryptocurrency, there's commodities, there's forex, there's so many things, there's index, right? So if the thing you want to trade is not giving you anything, don't trade. Okay, me particularly, I only trade gold, right? I was saying I only trade gold. I literally have passed, I've done like 10%, 8% a month in 2 weeks, 3 weeks, just trading gold alone. But there are days when I chart gold and I don't see anything, I just don't trade. I go do other stuff, you know, I go with my friends, I go swimming, I go on a holiday, whatever it is, but I don't trade if I don't see anything. I don't force it. Okay, so yes, US 100. Yes, it's been on a downtrend for a long time now. Let's see if it still wants to go lower. Let's see, so wants to go lower. Okay, I can probably do US 100 and then we can do Joe's request of gold. I have a rough idea of where I think gold is going. I think it's a sell, but the entry is not anytime soon. Okay, may not even, maybe it's gonna be like in 4 or 5 hours. Okay, but the last time I look at the charts, gold, I think it's a sell, but the entry is not now. It's gonna be one of those where you need to wait. Okay, so let's highlight some things that I see on US 100. Okay, one thing I do notice is that it's definitely on a very huge downtrend. Okay, it's definitely on a downtrend. It's been in a downtrend for a while now. No surprise there. Okay, so because it's a downtrend, I am more biased to get in for a sell. Okay, because I do not like going against trend. Okay, you don't want to go against wave. Even if you're like just surfing in the ocean, you don't want to go against wave. You want wave to kind of like push you and it will be smooth and nice, right? Okay, so the only place I would consider getting in for a sell with US 100 is one here. Okay, this area here, this is my first possible sell entry. 2, if it breaks here. Okay, if it breaks, retest here, I'm gonna get in for a sell. Okay, or the other one is that it goes up from here, I'm gonna get in for a sell. Okay, other than that, I will not consider anything on US 100. Because if I give you an entry right now, right, let's say I'm like, okay, the sell is here, but it doesn't make sense because it's not at a key level. Okay, because price, again, let me remind you guys, price tends to react off key levels. Remember, price tends to react off key levels. Every time it reaches a key level, it tends to have some kind of reaction of that. It's usually where your best entries are. Key levels are usually where your best entries are. Okay, so let's say this is just a rough analysis, okay? Let's say price pulls back to this area. You're going to enter from here for a sell. I'm just giving you guys different scenarios. Stop loss is just going to be slightly above that. One thing I noticed about US 100, it does wick. It does wick as well, but it doesn't look that aggressive. Okay, once in a while, I do see some aggressive wicking here, maybe a bit of here, but other than that, I don't see very aggressive wicking. So our stop loss should be safe here. Then this will be our take profit. Okay, so this is the first scenario. The first scenario would be this. Let me use Fibonacci to see how strong this area will be. I mean, obviously this sell entry here will be fairly a strong one. Why? Price already came here once, twice. It came here one time, it reversed. It came here second time, it reversed. If it comes here the third time, there's no exception. I obviously would think it's going to reverse too. Why? Because the last two times it already showed us that this area here has some significant resistance there. So if there is a resistance there, if price were to come here the third time, that resistance will still be present and price will still have a chance of reversing there. Okay, on top of that, there's a 38.2. It's probably going to be a, I think it's a 78.6 or a 100% lining up in that same exact area. Give me a sec. Okay. I would say this is an area of resistance. I'm going to highlight the area because support and resistance is never just one number. It's usually a zone. Okay, your stop loss can be here slightly higher, and your take profit can be here. Okay, this is what I would love to see happen. Okay, I would love to see price do a little pullback. Here you enter for a sell. The other scenario is that price doesn't pull back. Here it immediately just breaks down. And when it breaks down, right, when it breaks down, you wait for the pullback here, and then you enter here for the sell. Okay, I'm not liking this scenario because that means you need to find a new low for the take profit. I don't love playing breakouts, but it does happen sometimes and we have no choice. We have to play the breakout. Okay, if a breakout happens, hopefully it doesn't. Hopefully it just goes back to our ideal entry. Okay, the take profit will be here. The stop loss, honestly, will just be slightly above the breakout. Okay, it's going to be very dangerous. I think playing breakouts are super dangerous because there's a lot of times when it does the retest, it retests to your stop loss, or like it retests much higher than you expect it to, and then it hits your stop loss. So the stop loss, you want to put it a bit higher, you can. Okay, but then your risk to reward wouldn't be the best anymore. Okay, if it does, if it does pull back, I do think this somewhere around here would be the safest area. Okay, then it wouldn't, like, the risk reward would suck already. Okay, so in this case, we have no choice. We just have to put a very tight stop loss. Okay, so this is just my analysis on the daily. Let's look at what the 4 hours is saying. Okay, 4 hours. The daily is what I would think would happen in the long run. Okay. Oh, sorry, I keep pressing the wrong button. I want to press backspace, but I keep pressing enter. Okay, on the long run, if that doesn't happen, I do think there might be a short reaction here. Okay, I do think there might be a short reaction here. What's going on? What's my error? Okay, there it is. On the smaller time frame, there might be a short reaction here. Okay, there might be a short reaction here. You might be able to get in here for a very short sell. Okay, with the same stop loss in this area. Sell entry, take profit. Okay, so it depends if you are swing trading or if you are day trading. If you are kind of like scalping or day trading, I do think there is a possible entry here. Okay, if I'm wrong, then it'll hit your stop loss fairly quickly. Okay, there's one very tight one. Let me see what the indicators are saying. Yeah, indicators are agreeing. Stochastics, RSI. Okay, stochastics not agreeing with this analysis. RSI not really agreeing with this analysis either. Okay, there's a possibility this might play out, but I think because stochastics is not really agreeing with our analysis, so I don't love this analysis. Okay, so if you want to play this really short move, you can, but ideally the best sell entry will be here. Okay, the best sell entry will be here. I know if you wait for this entry, it's not going to be today. It might be like mid of this week or something, right? But I think this is the best sell entry. Okay, this one might work out. This might work out, but I think the best one is this. Okay, the best trade to play is this. Okay, let's look at gold. I have 3 minutes left. I can probably go through gold and give you guys a very rough analysis. Okay. I'm gonna have to delete this. So this is my Elliott wave analysis a while ago. Okay, it's not relevant anymore. It already played out. It's not relevant anymore. Okay, where do I think the entry is? I think it's going to be a sell. Like I don't have, there's very, very little doubt in my mind that gold, it's going to be a sell for gold. Okay, but the question is, where do we get in for the sell? I see a very, very, very strong area of resistance here. Okay, there's going to be a few possible entry for sell for the gold. One is 1700 area. Okay, and one is going to be here, 1683. Okay, I think it's going to be one of this area for a sell. Again, we need to wait for price to get here, wait for the reversal pattern candlestick. The reversal pattern candlestick is the first sign of confirmation that, yep, this is the area where I'm going to reverse. And then you're going to get in. Okay, so these are the possible area for the sell. Where do you sell it to? Being very conservative, you can just sell it here. This is being very, very conservative. Okay. The other one, if you want to hold it that long, you can sell it back to the bottom here, but that will be you'll be holding for a while. Okay, so this is something you can consider. Wait for the reaction, wait for price to get to one of the sell entries, and then that's where you can consider getting in for the sell. Okay, guys, that's all I have for you guys today. I hope you guys patiently wait for the entries. Sorry, there's nothing exactly at entry right now. There's rarely ever when price is just perfectly at entry, okay? It doesn't work that way in trading. You're gonna have to wait. A lot of time is you're gonna have to spend waiting. So thanks for attending our webinar today. I will catch you guys again. Thanks for that. Thanks Joash. Thanks Muhammad. Thanks Brian. Oh, hi. I do see some of you. Just remember, guys, we are streaming this on different platforms. We are on Zoom, we are on YouTube, we are on Facebook. So wherever you are watching this from, thanks for attending our webinar, and I will see you guys again soon. Bye.